Hello and welcome to Talking Global Infrastructure, the podcast from the Global Infrastructure Investor Association. I'm Nick Elliott, Policy and Public Affairs Manager at GIIA. Today, we're diving into a very hot topic, artificial intelligence infrastructure. Whilst there's plenty of excitement about AI's potential to transform almost every aspect of our lives, what's often overlooked is the massive infrastructure required to support this AI-driven future. As Sundar Pichai, CEO of Alphabet, recently pointed out, AI has the potential to be more profound for humanity than electricity or fire. Just as those technologies required immense infrastructure build-out to reach their full potential, AI's growth depends on developing and upgrading the infrastructure that support it. This means building new data centers for advanced AI processing, expanding low-latency, high-capacity telecom networks, and increasing low-carbon energy generation to power energy-intensive AI GPUs. NVIDIA's CEO, Jensen Huang, estimates that $1 trillion will be needed over the next 4 years to develop AI-ready data centers, highlighting the scale of immense investment required for this technological leap. Today, I'm thrilled to be joined by two experts in AI infrastructure investment. First, we have Alex Villela, Managing Director and Head of Venture Capital at Digital Bridge Investment Management. Digital Bridge specialises in high-growth digital infrastructure companies. Before joining Digital Bridge in 2021, he was a managing director at Qualcomm Ventures, where he oversaw investments in 5G and digital infrastructure, including managing the $200 million Qualcomm Ventures 5G fund. He also spent 7 years at Intel Capital, focusing on digital infrastructure deals in Latin America and the US. Also joining me is Brian Burns, a partner with PwC's Strategy and team, where he leads on the firm's commercial due diligence and corporate strategy in the telecom sector. Brian's expertise spans telecom operators, infrastructure such as towers, fiber and data centers. And before PwC, Brian spent nearly a decade advising investors and industry players on telecom strategy at Analysys Mason. So without further ado, let's dive in. Alex, Brian, thanks for joining me today. Alex, to kick off, can you help us unpack what we mean by AI as infrastructure?
Yeah, absolutely. When we think about AI in infrastructure, we think the impact of artificial intelligence goes in two ways. The first point is what we call infrastructure for AI, and that means larger data centers, typically one order of magnitude bigger than the legacy data centers. Means also more power, so the power consumption is going to double in the next 3 years in data centers. Means more fiber, more densified data centers, etc. In addition to infrastructure for AI, we also have what we call AI for infrastructure, which kind of conveys this idea that artificial intelligence is going to be embedded into infrastructure in a way to better optimize, automate, and orchestrate infrastructure in general. We believe that over the next few years, AI is going to be infused into every single facet of the infrastructure lifecycle, since the way that we select sites to deployment, monitoring of infrastructure, troubleshooting of infrastructure, and even this idea of self-healing. So in the long run, we believe that this idea of autonomous infrastructure that we require minimal human intervention will become a reality with artificial intelligence.
Thanks for having me on the pod, Nick, and great to be speaking alongside Alex. I think I quite liked Alex's characterization of AI as being both a tool for infrastructure investors and infrastructure assets, as well as a demand driver for infrastructure. I probably typically focus a little bit more on the demand driver side of things. And I see the opportunity as being, probably see it in three segments. So there's AI inferencing, i.e. running the models, AI training the models, and then the connectivity layer of high capacity, low latency connectivity, which is required to support this. If we think about AI in general, our research at PwC suggests that AI will contribute $15.7 trillion to the global economy by 2030. We estimate that there will be at least 400 billion of capex spent on data centers and GPUs over and above what would have been spent on non-AI workloads over the next 6 years. All these models need to be trained, typically in large data centers. They need to be, each time a user calls them, they need to run. And we need that capacity, which is going to support that. So, I think this is clearly an exciting opportunity to be, we're still in the early stages of where our AI is going to take us. exciting opportunity for the infrastructure community, but also society as a whole. I think probably the balance which we have is we're seeing a lot of interest in the AI space. We're seeing a lot of capital flowing into what is a relatively nascent market, and perhaps, dare I say it, even a certain degree of hype around the market. So I think the big challenge for investors will be, how do we build conviction around not only do I like this market, but also this asset that I'm backing, it's going to be one of the winners, and we're going to back that with high conviction.
Thank you. And Alex, just talking about, the opportunities of infrastructure investment in AI, from your perspective at Digital Bridge, what are the key opportunities you're seeing in terms of investment?
So maybe I can give like 3 examples of investment thesis, right? So the first one is kind of AI cloud, so to speak. So a good representative of that is a company called CoreWeave. When we think about AI in terms of IT infrastructure, the requirements are very specific. You need a lot of GPUs provided by NVIDIA. So this is really kind of the basic building block for companies to create models around artificial intelligence. And also you need a connectivity fabric that is prepared to move huge amounts of data from one place to another. Those requirements, they really represent, kind of unique requirements when you think about cloud service providers, right? And there are companies that are trying to tackle that challenge. I would say that CoreWeave is a great example of that. Very rapid growth, given the amount of interest that enterprises have around, building their own models. So AI infrastructure, a cloud AI would be like the first thesis I would mention. The second one would be this idea of enterprise AI applications, right? So we, of course, all of us use ChatGPT, but it's trained with public internet information. We know that when it comes to enterprise markets, 85% of all the enterprise data is, sits behind the firewall, is what we call dark data. So, OpenAI doesn't have access to that information when it is creating some of their foundational models. We think there is a huge opportunity for enterprises to create their own proprietary models, train it with their own proprietary data with safety and privacy. So we think this is going to be a massive opportunity. It's going to be universally adopted by companies in different segments. And the third one is, as I mentioned before, this notion of AI-powered infrastructure management is going to be very powerful, right? So if you think about service providers in average, they spend 20 to 30% of their net revenues in terms of infrastructure management. We think this number can be substantially lower when companies start adopting AI-based solutions to basically automate every single part of the infrastructure lifecycle management. Again, from the way that you select the site to deployment, all the way to monitoring and troubleshooting, we are going to see AI automating this whole lifecycle, and that's going to bring a huge benefit in terms of OpEx. So those are, examples of investment thesis that are really exciting for us as investors.
So if I think about the market in terms of training, inferencing, and associated connectivity, so those 3 segments, what's interesting is that both training and inferencing of AI models is typically done using graphic process units. So those are GPUs as opposed to traditional workloads which use CPUs. This is important for infrastructure because the GPUs require very high rack density, produce a lot of heat, require a lot of cooling, and consume a lot of power. So that this is a real challenge and opportunity for data center operators and investors in this space. So if we think about those 3 segments, we see training of AI models typically done in very large data centers with very high rack density and access to low cost, ideally green electricity. Often, in particular where models are trained on public data, actually location isn't very important for the training market, and therefore the training market is a global market as opposed to traditional colocation, traditional data centers, which are often more localized markets. Then if we think about the inferencing, many of those characteristics apply for the inferencing market, but often we see either because of latency concerns or because of data sovereignty concerns. Actually, location can be more important for many workloads. Inferencing is done in country or closer to the user. And then I think connectivity applies across the piece, right? So the requirement for connectivity associated with AI, in addition to what we'd already seen in the public cloud space, is continuing to drive growth in that space.
So a lot of our conversation so far has revolved around data centers and their key role in AI infrastructure. There are definitely challenges, such as high energy consumption, regulatory restrictions in certain countries, and significant infrastructure costs associated with investment in data centers. And I think there is a significant outstanding question in terms of how industry can address these issues. Alex, from your perspective as an investor specializing in digital infrastructure, what do you see as the key challenges in investing in AI data centers?
I think Brian mentioned quite well the dynamics around GPUs. GPU is kind of the basic building block for AI processing. A few things about GPUs. First, they are very expensive. A GPU server is going to cost $30,000. Second, they are scarce. So the lead time for a GPU server right now is going down a little bit, but last year was like 40 weeks or so. And third, they consume a lot of power. If we consider, for instance, NVIDIA's latest GPU, that consumes 40% more power than the previous version. It's similar to what a toaster consumes. So it's kind of huge. So when you think about those elements, so you get a notion that how fast the power consumption is going in the data center industry. So we are going from 48 gigawatts of power in the whole industry to 96 gigawatts of power in 3 years. So basically doubling the power consumption for the whole industry in a relatively short time frame. So for instance, just to give you another interesting caveat here. So just this year to 2024, NVIDIA is selling something around 3 million GPU servers. So the aggregate demand for those servers, it's something around 4.2 gigawatts of power, which is 10% of the whole installed capacity for the industry. So you have a notion of how fast the power consumption is growing based on those numbers. And I think there are a few implications around that. So first one is, of course, power is becoming like a scarcity. Power is becoming like a bottleneck for the industry. So the interest around renewable energy is going to be more and more evident around the data center players. So that's one implication. I think, nuclear power will become more and more part of the conversation for data center operators. Another interesting implication is that cooling technologies is going to become more and more important. So recently, KKR acquired a company in the space. So we see renewed interest from venture capitalists around companies in the cooling space. And perhaps the last aspect is technology. I mean, there is no silver bullet to address the power consumption issue, but certainly there are companies developing interesting technologies that can help large data center operators to be savvier around how they manage their power and creating interesting ways for folks to save energy bills. So for instance, in our portfolio, we have one company called Liquid, whose value proposition is really centered around allowing data center operators to save up to 80% of power depending on their workload that is being managed.
Thank you, Alex. And I think that's really interesting to hear some of the innovations that you're seeing going on in the space to help solve some of these challenges. Brian, from your perspective as an advisor, what specific strategies or technologies have you seen being implemented to enhance energy efficiency in data centers while maintaining or increasing computing power?
Yeah, and I think Alex said it well. If I think about the thermal design power of a traditional server, it was probably of the order of, call it 70 watts. A GPU today is probably 10 to 15 times that, right? With a similar form factor, similar size of server. So if we think about data center operators are dealing with 10 times the heat density that they would have done traditionally, with a lot of focus and rightly so from broader stakeholders on doing so efficiently. Trying to do it efficiently with the traditional air-based cooling methods at any kind of scale, I would say, is difficult. And we've seen data center operators and AI factory operators looking towards newer technologies. So things like direct-to-chip liquid cooling, immersion cooling, which allow you to more efficiently extract the heat from the hardware and run your data center in a more efficient manner. I think what's interesting about these technologies is that they both are able to, when done well, give you very good PUEs, so power utilization efficiency, the measure of efficiency of data centers, but also because they're supporting much denser workloads, it means that the footprint of the data center is smaller for a given number of megawatts. So you need less concrete, you need less steel because you've got sort of fewer walls and ceilings. And actually, that means that the cooling technologies are offering pretty reasonable capex per megawatt levels, but also you're saving a bunch of the embodied carbon from the concrete, etc., that you would have in some of the traditional methods, which will be on much larger footprints of data centers.
Alex, are there any specific markets or countries that you believe hold significant potential for data center investment, perhaps in terms of their policy stance on the market or their potential to match the heightened energy demands we've been discussing?
So when you think about power, when it comes to key success factors for data centers, we are really talking about three key items. First is power cost. Second is, of course, availability. Third is what percentage of your power comes from renewables in general, right? Thinking about different geographies, right? So first, let's think about US. US is actually well positioned. So in terms of power generation, some of the challenges we have here are more around distribution, the grid itself, distribution of power, not necessarily on generation. So the power in US for industrial applications is something around 7 to 8 cents of dollar per kilowatt, which is actually very good. It's quite compelling. Also, US is a big producer of natural gas, which positions us in a very good spot when it comes to the data center industry. As I mentioned, most of the bottlenecks are really on the distribution side. When you compare that to China, for instance, China is also, has a low cost of power. We are talking about 8 or 9 cents of dollar per kilowatt. The challenge in China is more around access to renewable energy. So 60% of the energy comes from coal, which is not necessarily clean. Another market that is also very well positioned is actually the Middle East. Cost of power in the Middle East is very low, 7 or 8 cents of power per kilowatt. So we see a lot of initiatives and a lot of interest from Middle East players to bring more of the data center investment into the region, right? So this is something we're going to see over the coming years in a more pronounced way. When we think about Europe, the cost of energy is higher than that. We are talking about 18 cents to 20 cents of dollar, depending on the geography. Of course, there are geopolitical implications, dependency from other countries as well. Certainly some challenges to be overcome. We also have extreme cases. I would say Singapore is perhaps one of those. Singapore today, 88% of the energy in Singapore is going to data centers. There is a ban right now on new infrastructure, on new data centers in the region. Certainly goes in the other extreme. I think, the access to power and, of course, low energy power is going to be like a key consideration for, data center operators in the coming years when they site select.
Brian, do you have anything to add to that assessment?
Yeah, I think that the thing I'd add is just coming back to the previous point. We should remember that the market for AI is global, and therefore the degree of competition which geographies will face amongst themselves, I believe that will be much higher than we've seen in the traditional colocation market. Any market which plans to succeed here better be proactively investing in green power production and distribution in order to support the industry.
Most of our discussion so far has revolved around data centers, but aside from data centers, we know that many other forms of digital infrastructure will be vital for helping to facilitate the continued growth of AI moving forward. Alex, beyond data centers, what other technologies or infrastructure investments do you believe are essential for supporting the entire AI ecosystem?
Yeah, that's a great question. That's a great conversation, right? So I wanted to mention one of the points that Brian mentioned before, which is hopefully it's going to help me make the case for fiber here. When we think about AI, at the highest level, we have two types of workloads. We have AI training, which is this idea of creating models from scratch. For that particular workload, we really have to, it's not really latency sensitive. So we can train this everywhere, provided that you have a very low cost for energy. And you have, of course, AI inference, which is latency sensitive. So in this case, you need to be close to a consumption node. So over time, you're going to see those things unbundling a little bit. We're going to have data centers which are more focused on training and the inference happening in different locations. At the limit that, if the model is sufficiently small, the inference can happen even at the smartphone level. So when you think about that, that brings the need for a very flexible, high-performant connectivity fabric, kind of connecting those two universes. So that certainly is going to be a big driver for fiber in the coming years. We see in our portfolio already some of the fiber companies being benefited by AI adoption. Also, there is a demand for, I would say, SDN solutions, software-defined networking solutions, which really create, basically a technology that allows you to connect those 2 points in a very flexible way, in a very dynamic way. You can provision those connections in a matter of a few minutes. And when we think about antenna towers, we are still not seeing the tailwinds from AI in that particular market, but that's going to happen over time. Folks are becoming more and more creative around models. We see that potentially in the future, we're going to have models that are small enough to be run in your smartphone without consuming all the battery that you have. And that certainly is going to be a driver for, I would say, network densification. That's going to be a driver for, more and more antennas. So this is something we see also coming in the coming years.
So to wrap up our discussion, I'd love to hear from you both about what you see as being the next frontier in AI infrastructure investment. What emerging technologies or areas do you think will drive the future of this field?
Yeah, look, I think we're right at the start of the wave of opportunity here. We've talked a lot about data centers, we've talked a lot about AI factories and a lot about connectivity, but the opportunity, there's so far to run in all of those areas. I think what we've mostly talked about in this discussion is the investment opportunities and the sort of the demand drivers. I think the next wave will be, how do we embed AI tools in deal execution, asset management? And I think that may well be worth a podcast on its own.
My take is what I think is really going to be exciting in the coming years is the advent of autonomous infrastructure. I think this is going to be massive. If we think that the service providers, they generate on a combined basis something around $3 trillion in revenues, and considering that they spend 20 to 30% of net revenues in infrastructure management, we are talking about a potential addressable market here, between $600 billion to $900 billion per year. And that's going to be subject to automation in the coming years. So I think this notion that AI is going to be infused into management systems in a way to orchestrate, automate, and optimize is very, very powerful, right? So we see some interesting innovation. I can mention, for instance, a few things that we are seeing around power management. We've seen, for instance, a few startups creating models that are trained with, basically data center information and use that information to better manage the thermal stability and cooling processes in a data center. So Google has a very public case around that. So they use artificial intelligence and large models to basically address their cooling challenge that they have. Cooling represents roughly 40% of all the energy consumption that you have in a data center. So Google was able to save something around 30% of their cooling expenses by using AI to manage that. So that amounted to something around $400 million. So if you consider that Google is traded at 25 times profits, so this is like a $10 billion ad in terms of market cap, which is nice. I believe you are going to see several, pockets of innovation around the whole infrastructure lifecycle, and examples like this are going to be, more common over time. So this is something that really gets me excited. And also, back to Brian's point, I think we are in the first stages of AI adoption. So, drawing a parallel with other technologies. So we always follow a sequence that, people call IPA. First, you have the infrastructure built out. Second, you have, platforms being built on top of the infrastructure. And third, you have, applications being built on top of platforms. So we are here actually in the first stage. I mean, that happened. I mean, if we look at like 25 years ago, this is how the internet was built. So initially we had Cisco, which at the time was the largest company in the world in terms of market cap, kind of driving, the infrastructure build out. After, a few years, we had Google as one of the preeminent platforms being built on top of that infrastructure. And later you had, applications being built on top. You have the Ubers, the Airbnbs of the world, kind of leveraging the innovation that was built by the predecessors. So for AI, I anticipate that we are going to have a similar cycle. So right now we are seeing a very large, very aggressive build out of infrastructure. And over time, I mean, I anticipate that every single enterprise software category will be reinvented with new eyes, right? Basically incorporating AI as a native implementation. And for us as an investors, this is great because whenever we have a disruption cycle, this is like a perfect situation for, new entrants to participate in the industry. So we are very excited about that.
Thank you both. Sounds like there's no shortage of opportunity in this space. Well, that brings us to the end of this episode. Thank you both for sharing your thoughts, and thank you to our listeners for joining us on Talking Global Infrastructure. Make sure to follow us on Spotify, Apple Podcasts, and YouTube so you never miss an episode. Our website, GIIA.net, includes industry news, useful insights, case studies, and reports on infrastructure investment. Find us on LinkedIn and join our mailing list for the latest news and trends from the sector. Do you have an idea for an episode, thoughts, or feedback on this or other episodes? You can email us at communications@giia.net. Thank you once again to our guests Alex and Brian. We'll see you again next time.